This is the Bloomberg Daybreak Asia podcast. I'm Brian Curtis along with Doug Krisner. Join us each day for the stories making news and moving markets in the Asia Pacific. You can subscribe to the show anywhere you get your podcasts and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.
Let's bring in our guest. Rebecca Walser is with us. She is president at Walser Wealth Management, joining us here at the Interactive Broker Studio in New York. Thanks for dropping by.
So glad to be here, Doug. Thanks for having me.
Are we talking about a soft landing now when you look at kind of what the Fed is signaling and then the data that we had today, particularly the second quarter GDP number?
Oh gosh, I hate to be such a contrarian, but I wish I could say yes, Doug, but I just don't see it. I wish I did. I know the retail numbers are great, but I'm looking at the forward guidance of the consumer, and the consumer is really telling us that they are out of cash to spend. I know retail sales have been good, but that's always historical data, right? So we're looking forward, and we're seeing that consumers, we have the highest credit card balances, 1.3 trillion in the history of our country. Our delinquency rates are astronomically accelerating. Our car delinquency rates are accelerating. So, Doug, the stories aren't matching up with the GDP numbers showing such good, strong consumer spending versus where we know the consumer is right now. So that's what I'm talking about, the future.
Okay, so the equity market then should be pretty worried when it comes to earnings, right? I
believe so. And I do think that we've had some, Mag 7 not great numbers this season. And NVIDIA was great. I double beat, absolutely great. But the guidance was still, saying, it was a reassurance that their market has got a long runway. But Doug, when you look at the guidance, people are still wondering, how is this going to be monetized? And if these other commercial buyers of NVIDIA chips for AI are not able to get a return on investment fast enough, are they going to be pouring the billions and billions that are going to NVIDIA? They're giving us these crazy astronomical 3,000% growth in 5 years.
The autumn can be very rough for the equity market. We're a week away from September. Are you braced for some downside?
Absolutely. I mean, this is the most shallow depth that we have seen. I mean, look at the concentration of Mag 7 in the NASDAQ, in the S&P 500. This is awful concentration in it. So if anything goes wrong, and when you look at the Middle East and you look at Russia, Ukraine, and you look at all the things geopolitically that are going on in the middle of an election season, in the middle of, we've got all of these pandemics. The WHO has declared a new pandemic of Mpox. So you have so many factors that any one of them pops off when you have such a weak economy. The fundamentals are so weak, then you should expect a really, unfortunately, an oversized response to anything that is on the outside that will be affecting it.
So you mentioned the election. I'm curious as to how that's affected your thinking on markets these days.
I mean, I think that obviously with the Trump administration, we would be more business friendly. I mean, we don't really know where Kamala's positions are economically. I'm really looking forward to this 9 o'clock interview. I'm hoping that she actually does go more into the economics of her plans because, Doug, her first kind of things that she's talking about are price controls. And all of us are bracing and saying, where is this coming from? This is not anything that we were expecting to hear. So for me, we're really looking for more details on what is her economic positions now.
Speaking of the economy, how do you think the Fed has been doing it, kind of getting away from ultra-tight monetary policy? We got an indication, pretty strong one, last week from Fed Chair Jay Powell. We're looking at a rate cut as soon as the September meeting. It could be as much as 50 basis points, although I don't think when you look at what the market is telegraphing, it's more likely 25. How do you feel about rate cuts going into the end of the year? Is it possible that we get a total of 100 basis points in cuts?
Well, I think that would be difficult if we only get a 25 in September on September 18th. So we'll see, but I don't think the Fed is going to go to a 50-point cut swing as fast as September. One, because it's so close to the election and that can kind of be couched as political by people that don't appreciate that. But two, it also really, Doug, sends a more fundamental message to the global economy that something is wrong fundamentally underlying. And if you look at, we had the largest, second largest retraction of jobs, 818,000 last Wednesday. And we already, that's on top of all of the diminutions that we had monthly, all the corrections. This is the second most corrected BLS that we've had since 2008 and 2009. So obviously those numbers were just coming in way over, too extreme. Mm-hmm. And they were brought back down as they were corrected over the months. But then the annual correction almost took another 1 million jobs away from last year. So that is where you're seeing Powell come back in and saying labor is definitely now a concern. We're seeing the softness. business. And so he's looking at a cut. But if we have to go to a 50 basis point cut, that is signaling that there's something even more alarming going on.
Where are you seeing opportunity in markets these days?
You know, obviously, I hate to say it, but the breadth or the long-term runway that we really do think is the AI tech space, and that's why the whole world is invested in it. So there is common sense there. But you know, you have to look at, if we're going to go into a recessionary worldwide kind of period, where are recessionary places, and that's always going to be your consumer, you know, defensive, your staples, your utilities, you know, your commodities. So we would look at if we start to see really moving towards more weakening economic data, then we would look at more defensive positions.
Are you worried about recession at all?
I am, because, you know, you look at Germany and their manufacturing is depression level. You look at China and we know what's happened there. You just mentioned yourself, Japan is slowing. Everything is slowing globally. And really, if you think about it from my perspective, it starts kind of in the East with the Asian exporters, and then it also moves to Europe, the European zone, which we know how that is going with Germany. And it really then comes to America. So these have already kind of been going through the slowdown, and it's now coming to us. And we are the world's reserve currency, which helps us, you know, export our inflation as much as we possibly can. But there is a day, Doug, that we have to pay the piper to.
So if we can agree then that places like Asia and Europe have been slowing for a while, maybe there's opportunity in those markets. What do you think?
Well, I can tell you that I don't recommend anybody go out and borrow yen and buy and do investments in dollars. So because the carry trade that we know came up on August the 5th is far from being over with. So be careful. Just be cautious, because right now, if we go into a kind of global financial, and you have to understand too, Doug, this is the first time that we are really seeing global economic interplay so vastly that as China, you know, potentially collapses, as Japan, I'm not saying it's collapsing, but I'm saying as these things happen, we are so dependent now, as they're the exporters and we are the importers, that what happens with them is going to come to us. So we just have to be very cautious.
So do you like the bond market there? If you're a little concerned about growth going forward and the Fed is going to cut rates, we don't know by the magnitude, but are you seeing opportunity in the bond market?
I mean, I think that the bond market always does well in a period where there's less interference by central bank policy. So that's where we have to see, where are these central bank policies taking us? We know they're implementing Basel III, and that's why we've seen all of this gold purchases by all of these central banks around the world. How does that impact what the central banks are going to be doing? But you're looking at the, like, just even here in the Federal Reserve here, we're in a net negative interest rate situation. We're normally having the Fed send the Treasury interest on a monthly basis. That is costing us money right now. So the Fed's balance sheet at $7 trillion, it still needs to come down. To your point earlier, you said, how are we slowing down the tightening? Well, we reduced quantitative tightening from some 90 billion to some much less, 60 billion less. And that has helped our economies be sustainable. But now we're at the point of cuts. And so I would be more concerned about yields in the short term.
Just want to point out that everything that the Fed earns on its balance sheet is deposited at the Fed's account in the U.S. Treasury. So it's a way the government can make a little bit of money at the margin, right? That's right. Let's do some walkabout economics. You're based in Florida. How is the economy in Florida holding up?
I mean, I think that for us, we know I'm in Central Florida, Tampa, and we're still seeing just a massive amount of relocations business-wise. You know, we still, I mean, our property in the commercial space is actually really tight. Our inventory is low. As far as the, you know, retail and consumer housing, the inventory is ticked up just like it has across the country. But we are still seeing a really tight commercial retail availability. So that is really just because of a lot of businesses relocating to the state of Florida, state of Texas, from other states that are maybe more restrictive and more expensive.
Miami in particular, too. Do you get down to Miami at all?
Yeah, I do, absolutely. And it is just Florida just feels like a different part of the country right now. Everyone else seems to be sort of slowing down. And I just know Florida, Texas, Arizona, these countries are really growing their net, businesses, which is great. But it is a problem. I'm in between of moving office spaces, and it's been quite a challenge in Tampa, just securing office space and doing a build out because of how much activity is going on. It's crazy. It's like we're living in two different worlds.
Rebecca, a delight to have you on the program here in New York. Rebecca Walser, president at Walser Wealth Management, joining us here on Daybreak Asia.